Alright, folks, we're back. Enjoy the music. Alright, family. Alright, welcome back to another edition of Imminent Economic News. Alright, we're going to go ahead and get it started. Look at the futures markets. Alright, we're looking down across the board over here. The S&P futures is down 10.50 points. The Dow futures is down negative 54 points. The NASDAQ is down 75 points. And the Russell 2000 futures is down 4.50 points. Alright. Alright, we take a look at overseas over here. The U.S. Small markets. We're looking at the F.O.M.C 100 is down trading right now at about negative 6.57, and the Nikkei 225 is up operating in the green about 219.95. All right, we get into some cryptocurrencies here. The U.S. dollar, Bitcoin to the U.S. dollar is trading down 134.31 to about 15,536.42. The CMC crypto is actually operating in the positive at about $22.47 to about $298.49. All right. GBP to the U.S. dollar is operating at 1.3136 in fluctuating trading. U.S. dollar to the Japanese yen is at 103, and there's 103 right now, and in between 103 and about 4.54. All right, the 10-year bond is still at 0.7760 unchanged, and the VIX is down in the red about 1.54 to about 28.03. All right, and the U.S. dollar, euro to the U.S. dollar is about 1.1843 right now and fluctuating. All right, crude oil is down about 34 cents to about $38.45 a barrel. All right, so let's go ahead and get into some cryptocurrencies. Well, wait, let's get into some more stock markets, okay? Look at some of the Asian markets over where at Kick. That was brought to you by YahooFinance.com, all right? Now we'll switch over to Kitco.com for some more market news. All right, the Stocks 50 is down 4.52. The F.O.M.C 100 is down 4.44. The DAX is down negative 9.858, all right? All right, look at some Asian markets here. Let's look at the Hang Seng. The Hang Seng is down 21.26, and the S&P AXX 200 is operating at a positive about 50.60. All right. Then we get into some cryptos here. Getting down to the world spot price for precious metals. All right, gold has took a little bit of a tumble, down $2.10 to about $1,940.50. All right, silver is up about 2 cents to about $25.48. Platinum is up $2, $906 even. Palladium is up $14 at $2,423 even. And rhodium, the asking price is $13,400 even. All right, with unchanged. All right, those are all asking prices for precious metals. All right, coming up. All right, let's go ahead and get into some actual news. All right, listen to the FMO, to the Federal Reserve Chairman Jerome Powell last night, and we're switching over to shadowstats.com. That's John Williams' website. All right, the FOMC, the Federal Open Market Committee. The Fed maintained existing accommodative monetary policies addressing COVID-19 pandemic disruptions to the economy, the Fed's full employment mandate, and to the financial system. November 5th, Federal Reserve. All right, the Federal Reserve's Federal Open Market Committee (FOMC) maintained its targeted federal funds rate at 0% to 0.25%, And will continue attempting to push inflation consistently above 2% and to continue increasing its holding of Treasury securities and agency mortgage-backed securities, at least at the current pace. Such means a continued boosting to the monetary supply with an eye toward triggering higher inflation. See systematic risk discussions, all right? So basically, they're going to continue their push for inflation. They're going to continue pumping money into the open market. More money, the more currency is out there, the less purchasing power that we have. They're just dumping money everywhere they can to try to fix the problem. All right. Now I'm switching over to ZeroHedge.com. The following story here comes from, once again, ZeroHedge.com. Treasury announces Treasury announces a record 122 billion refunding debt sale. All right. So even people after the election, people focused on that one get focused on the economy, what's going on here. All right. While it will get zero notice in today's post-election chaos, at 8:30 a.m., the Treasury issued a quarterly refunding announcement in which it said it will raise its long-term refunding debt sales next week to a fresh record 122 billion to refund approximately 60.9 billion of Treasury notes maturing on November 15, 2020. All right. Treasury notes, that's debt sales, all right? The issuance will raise new cash of approximately 61 billion. Here are the details. Treasury to sell three-year notes for 54 billion on November 9th, up from 52 billion in October. All right, Treasury sales of the 10-year note from 41 billion on November 11th, up from 38 billion last quarter. All right. Treasury to sell 30-year bond for 27 billion, up from 26 billion last quarter. All right, the total combined sales of record 122 billion for the three mature compares to 112 billion last quarter. As a reminder, the Treasury had nudged up 3-year sales to 2 billion already in September and October. All right, they're trying to raise liquidity. They're trying to raise money everywhere. Liquidity means they need cash. They need money. All right, greenbacks. All right, everything is going downhill. The world debt is being called in. That people are trying to keep the financial system liquid as long as they can. All right, family. All right. The following that story was from ZeroHedge.com. Now we're switching over to Boomer Health, BoomerHealthReport.com. All right, BoomerHealthReport.com. As reported, Bank of America predicts perfect storm. 20% stock market crash will be seen in the next couple of days. All right, this is coming from BoomerHealth.com. All right. An unprecedented stock market crash is right around the corner. In the face of mounting uncertainty surrounding the coming elections, the new Bank of America data suggests that a 20% market plunge will be seen in a couple of days. The prospect of a contested outcome might crush investors' expectations and finally trigger the ultimate downfall. In this video, we discussed the perfect storm of investors having long fear. All right, the video, you can go to the website boomerhealth.com. All right, and they have a video. They posted up of what Bank of America predicts is a 20% stock market crash within a couple of days. All right, this article was kind of posted a couple of days ahead of the election. All right, so this is what they predicted. All right, this boomerhealth.com, Bank of America, perfect storm, 20% stock market crash will be seen in a couple of days. All right, I'm not gonna go into much of that article right here, family. Just go and look up boomerhealthreport.com and go punch the video in yourself. All right, family, see what they're saying. All right, and this next article comes from the Motley Fool. All right, themotleyfool.com. All right, or www.fool.com. All right. So the new data suggests the market crash may be imminent. All right. All right, even with historic low Treasury yields, investors want little to do with equities. All right, it has been a buckle up and hold on short of year. All right, for Wall Street investors, the unprecedented uncertainty created by the coronavirus disease 2019 COVID-19 pandemic has shaved 34% off the benchmark S&P 500. All right, in a matter of just 33 calendar days during the first quarter, we also witnessed the fastest snapback rally to new highs from a bear market low on record. In all, we have crammed about decades worth of volatility into a 6-month window. That's bad, family. That's really bad. All right. Scary thing is, we may soon be doing it all over again. All right. All right. The new data tells a scary tale. Aside from volatility, one thing stock market isn't short of these days are doomsday predictions, and we're about to hear another one. Previously, all right. When people say prediction, they're guessing. All right. They're predicting something. They're hoping it may come true. If it don't come true, some people are predicting something. They're guessing about it. If it comes true, they're sad about it. If it doesn't come true, they're happy about it. Either way it go, they okay. This might happen. It might not happen. All right. All right. I continue. Previously, I suggested that the stock market crash or correction was highly likely because historical data said it was. Previously, following the previous 8 bear markets dating back to 1960, there were a grand total of 13 crashes between 10% to 19.9% within 3 years of the bear market lows. All right. Also has to say each new bull market underwent one or two sizable corrections relatively soon after bouncing off a bear market low. All right. So, what they're predicting here in this one, that the stock market crash is imminent. All right, go down a little bit more in the article. All right, here's what's concerning. This was the 11th consecutive week of following funding outflows, which has taken a hold, and the 26th consecutive week of week for conventional fund outflows exceeding ETFs. Domestic equity funds are also riding a 19-week streak of ongoing outflows. All right, outflows mean the money is going away from them. All right, money is all cash and money is going away from them. All right, the stock market might be near their all-time highs, but the data suggests that investors aren't exactly thrilled with the prospects of putting their money to work in equities right now. All right, as you can, one thing they're pointing out here, the stock market is going up, but the money is not going to it. It's only a handful of stocks that are keeping up right now. Plus, the Fed is pumping money into it. All right. All right. So we're heading back to for the final story. Going back to ZeroHedge.com. October payrolls preview. It's about to get ugly. All right. All right. With the nation transfixed by the bad game show of the presidential election, yeah, it is a bad game show. Now on its third day and counting, all right, it is safe to say that nobody, not even the OLOGs, ALGOS OLOGs, will give their rat's ass about October jobs data and the Bureau of Labor Statistics report on Friday. So we got more numbers coming out this week and more numbers coming out on Friday. All right, from the BLS report. Now, the Bureau of Labor Statistics. All right. Still, as we do every month, we will preview what the market expects for the first job reports after the election. Even if it's still unclear who the next president is, and the first report expected to shock Wall Street by how bad it is since the COVID mini depression. All right. All right. As News Squawk reports, the recent data has been somewhat downbeat, with the rate of initial jobless claims rising October survey. Weak against expectations it would. While ADP payrolls rose in October, all right, less than the expected and slower pace from low expected pace from the prior month. Although it should be seen as it will correlate to the Bureau of Labor Statistics' recent divergences. All right. So we'll flip down here. All right. And it goes pretty much all into it. All right. And then we'll go over a little bit. All right. With that out of the way, here are consensus expectations. Non-farm payrolls expectation of plus 600,000. All right. Unemployment rate expectation 7.7%. They were looking for a range of between 7.0 to 8.0. All right. U6 unemployment rate previously 12.8. Labor participation rate, private payrolls, manufacturing payrolls, government payrolls, average earnings month to month, and average earning year to year, and average weekly hours. All right. That's what's they're going to be looking at. Okay. All right, on Friday. So be expecting the jobs report to come out on Friday for the Bureau of Labor Statistics. All right. All right, family. All right. So once again, I want to thank you for joining us in another edition of Melanie News. All right. with the congression, with the national elections still not decided, things about to get real hairy out here. No matter who wins, use it to stay on focus. Be safe. Be ready for your money. Protect your money. Protect your purchasing power. All right. All right. No matter who wins, it doesn't matter. Please just protect your purchasing power. Okay. All right. Because we all know that a depression is coming. All right. If we've been in a sluggish recovery for over 10 years, for over a decade now. All right. They make it so if you say anything more than a sluggish recovery is bad. But truth be told, we're in a depression right now. All right. So be easy. Take care of yourself. Stay out of trouble. Don't looking to get into anything. Protect yourself if you have to. All right. Remember, become your own banker. Become your own savings and loans. Become your own credit union. And most of all, pay yourself first. Take it easy and be safe. Let's come together, family. All right. Once again, join us another edition of Melon Gamma News and enjoy the outro. Let's get it started.